Hi, this is Zam here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday the 27th of November. Who managed to kill the volatility on the FTSE 100. It's been in a 50-point range or less since this time last week. We've got the 50-day line there at 7,500 now, and the recent support, I suppose, just under 7,450. We're looking for an end-of-day close outside that range. We've got the RSI just above the neutral 50 level, so that maybe that gives us a little bit of a steer to the upside. We've got the 200-day line falling and the 50-day line. It's probably easier just to wait for a breakout. Initial support there just above 7,400. The next support down around 7,310, which is that April-March uptrend line from earlier this year. If we do break through the 50-day line, then it's 7650 at the February resistance line. And hopefully we'd see that resolved sometime in the first half of next month. Moving on to the DAX, we've had a massive move to the upside after that bear trap island reversal, and just dithering there at the old post-August resistance, 16,000. Looking for, I suppose, a clearance of 16,100, end of day close above that, but then hopefully take us directly to 16,500 and the intraday highs of the year. That would be quite a miracle. Even more of a miracle would be a move up to the top of that broadening May triangle at 16,800 by the end of this year. On the downside, the support area really at the rising 200-day line at 15,700. The Dow is next, and here a rather better situation in terms of the relative performance. We're already through that August-September resistance, which is the equivalent of 16,000 on the DAX, and heading up towards year highs at 35,700. Best case here is that we end the year near or above 36,000, that the top of that rising trend channel from November last year, 36,000. Not expecting any sustained price action now. Back below 35,000, or that is quite below the 35,000 areas. That's been multi-tested since the end of last month. On to pound dollar, which I've been looking at recently, largely on the basis of the strength that it's been delivering. Today slightly up, but now looking for this market to stay above resistance on the way down. That was around $1.2550 above that. Looking for up to 127.50 over the next couple of weeks. 50 and 200-day lines both rising. That suggests we'll have a golden cross sometime during December. The stocks are next, starting off with Bezant, where there's just the first signs of a turnaround here. We've already had the bullish divergence, we had a gap there, but that was filled. And really hoping that this market will stay above 0.03 pence to head up to 0.05.5 maybe over the next 1 to 2 months. Obviously, that'd be quite a big percentage increase for the shares. An easier thing to understand would be the current situation at Barron Oil, which I've covered many times in the recent past. I suppose it's got a lot of fans now, given the turnaround we've seen and the Chuddich speculation. Rising 50-day line broken through the 200-day moving average at 0.11 pence and looking for 0.14 as soon as the end of next month. I suppose if we're really lucky, we might get it by the end of this month. But 0.14, a big level there, as that was resistance during March and April. On to a stock which has looked like it's been in a slight bit of trouble over the recent past, EQTEC, but let's see. We're trying to turn around now, which it looks as though we are after obviously sustained losses. Falling wedge situation here, 0.05 the level to break, and if we can break that, then it could be up to 0.08 by the end of next month. We're backed by bullish divergence, and we would like to see this market stay above that 0.05 level, as that was the old support back in September. But I suppose the hope here really coming from that RSI uptrend that we have at the moment. One of the stocks of the year, even before the year is finished, is Empire Metals, and it's sort of galloping day by day here at the moment. I upgraded the upside over the weekend to 10 pence by the end of next month, and the way things are going, we might even possibly get that by the end of this month, or at least by the end of this week. The level to hold at the moment, 7 pence, which was the old target. That becomes new support. Moving on to eStar, where it's interesting that most companies, when they have news, try and puff it up and make it look better than it really is. But in the case of eStar, it was quite modest and humble, and the shares have been rewarded in that kind of way, up 29% so far. There's bear trap gap reversal, so we've gapped up from the lows, below the old June support there at 1.4 pence. The longer we stay above 1.4 pence and the 50-day line, looking for 2.5 pence as soon as the end of next month. But very impressive and very well handled RNS by the company. Moving on to another stock which has been on the front foot of late, Future Metals. Here we've got what I call a V-shaped bull flag, which is normally a good thing. We've got a rising 50-day line as well, and we're just nudging that 200-day moving average at 2.6 pence. Initially, we were going for 3.1 pence here, which is the top of that broadening triangle from May. Above that, we can get that over the next week or so, looking for it up to 4.6 pence, and that could happen by the end of January. Ideally, we stay above the initial November resistance at 2.3 pence, which is well below the current V-shaped bull flag. Very good news today from Hemogenyx, and as I wrote earlier on, if this was America and if this was a proper market and it was everything else was totally the opposite of what it is at the moment, the shares would be much higher, but we're up 8% with a gap to the upside. Want to see an end of day close through 2.75 pence, which was the old September resistance. We were already looking for 3 pence to fill the January gap, and after that, hopefully up to 4.2 pence. That could happen, the 4.2 pence, as soon as the end of next month, if we can get through that 3 pence area quickly over the next few days as a good reaction to the news. Hummingbird Resources is next. I interviewed the company last week, and here we've got a V-shaped bull flag above the 50-day moving average at 9.4 pence. Got a rising 200-day line, which I think has saved the day in terms of limiting the losses from the May peak. Looking for 11.6 pence in the 200-day line initially, hopefully up to 15 or 16 pence by the end of next month. The longer we stay above that 50-day line, the better it is for Hummingbird. Another stock which has been delivering over the last, few sessions is Novacyt with the unfilled gap to the upside. We broke the gap up day there around 56 pence, 57 pence, let's call it. And above that, looking for up to 90 pence as soon as the end of next month. It's a bear trap island reversal. So gapping down to new lows and then gapping up again. So that is a strong signal, one of the strongest around. Next one is Petrel, which keeps on trying to evade my the targets I set for it. Here you can see that we've had previous targets for the shares. One was at 1.75, the next one 2.1 pence. Above 2.1 pence, looking for a rather ambitious 3 pence, which is a resistance line projection from the autumn of last year, and looking for 3 pence maybe as soon as the end of next month. Very strong formation here. We've had a sideways shuffle and we've had a break of the main neckline there at 1.6 pence. So 3 pence looks on the cards by the end of next month. On to Powerhouse Energy, where we've got the first signs of a turnaround. Probably want to see the shares break recent resistance around. If we can do that, then it could be up towards the 0.4 pence area to end the year after what has obviously been not a great year. But with the new CEO in there and new chairman coming up, maybe things will improve. On to Predator, which has been quite an outperformer given how many placings it's had. We have had the resistance line there from August. Shares have danced around that, around 11.7 pence. Above that, we're looking for the shares initially to fill the gap there up to 14 pence over the next, say, couple of weeks. Maybe by the end of the year, with a fair wind behind it and no more fundraisers, we could get up to 18 pence. But just a decent sign there that the shares are finally on the move, at least up towards 14 pence. Stock I normally never look at is Rightmove, but here we've got the bear trap island reversal, so gapping down to new lows and then gapping up again today. And view now is that the longer we stay above the floor of the old gap there from October at 531 pence, the greater the chance of the shares moving up towards the top of the gap there at around 574 pence. We're looking for 574 by the end of next month, but let's see if we can stay above both the 50-day line and the floor of that gap. Finishing off with Tlou, which has been a frustrating market for many a year, but here we've had a falling wedge breakout, which we had at the beginning of last month. We gapped up and we've remained above the gap, so it's actually a very good signal there, bear trap gap reversal. We've had another island reversal with a gap up higher this week. All we're looking for now is a break of 1.8 pence to take the shares back up to fill up the gap down that we had in May at 2.3 pence, hopefully by the end of January. If you're a fan of the shares looking for greater glory, the glory there would be a move up towards 2.7 pence by the end of January. But the key here, holding above that 50-day line at 1.6 pence. That's it from me today. More updates tomorrow.